Happy New Year, YouTube. Dougie Chong here. Welcome to today's YouTube video where I'll be giving you tips on how to improve your credit score. Hopefully I figure out how to make a chart appear here that shows the 6 main factors that affect your credit score. So the 6 main factors that affect your credit card score are payment history, credit card utilization, derogatory marks, age of credit cards, total number of credit cards, and number of credit inquiries. We'll start things off with credit card utilization rate. So credit card utilization rate is essentially how much of a credit card's limit you use per month. So for example, if you have a $1,000 credit limit and you use $100 of that limit, that is a 10% utilization rate. As you can see from this chart, the lower the rate, the better it will be for your credit score. Tips to improve this part of your credit score include not using so much of your credit card limit or getting a credit card limit increase. Many times, banks will give you a small credit card limit to start, something like $1,000 to $2,000. You can simply ask them to increase this limit, and as long as your income reflects that you will be able to pay this larger amount, you can get an increase. Even if you only spend maybe $1,000 or $2,000 on this card, it is good to have a higher limit to decrease your utilization rate. Now on to the second and probably most important factor that affects your credit card score. This factor is called the payment history factor. Now, this one's probably the most easy factor to understand, and if you simply make your credit card payments monthly and on time, you will get an excellent score for this section. However, if you look at this chart, if you make just a few payments late or miss a few payments, you will fall into the poor category for this section, as you need higher than 97% on-time payments. These payments are all credit card payments within the last 7 years. Now on to the third factor of derogatory marks. A derogatory mark is basically a closed account that still had debt on it. So to increase your performance in this section, you simply have to not have accounts in debt that you are closing. This next factor of age of credit cards is pretty self-explanatory. It's basically how long the credit card has been open in your name. This factor shows why it's important to get credit cards early. If you start when you're 18, you will not have a credit card that is in the good standing until you are at least 27 years of age. This factor also shows why if you have a credit card that you don't really use anymore, it's a good idea to just keep it open anyways so that it still counts as a good credit card on your credit score. This next section of total accounts completely bewildered me, and it made no sense at all. For some reason, if you have more credit cards, your credit score goes up. The rationale behind this is that credit card companies think if you have a lot of credit cards and they're in debt, this is bad. But if you have a lot of credit cards and they're all in good standings, then you're handling your debt well. Now on to the last and probably strangest factor that affects your credit card score. This factor is known as the credit inquiry factor. Basically, the number of times you check your credit card score affects your credit card score. I personally would like to see this be more transparent and you just be able to access your credit card score whenever you want without penalty. It is important to note that in this section there are 2 different types of inquiries. The first one is known as a soft check, and the second one is known as a hard check. Sites such as Borrowell and a few others will do soft checks to kind of give a rough estimate of your credit card score, but it's not the actual score. A hard check is when you apply for any credit card or loan and the bank will actually do a hard pull and get the real credit card score. These scores will be similar, so I think it's best to just do a soft pull for most credit card checks. All inquiries will be on your record for the next 2 years, but after that they get wiped off, so it's not a huge deal. Another tip that I will mention is that the scores range, I think, from 250 to 900. But really, if you have a score of over 850 or even 800, you will get the best interest rates regardless. So striving for that perfect score is sometimes not the most beneficial thing. That's it for this video, guys. Thanks a lot for watching. Hope you learned a lot about how to improve your credit card score. It is important to note that I am not a licensed financial advisor. This is not legal financial advice. Also, these are just tips. The exact formula is rather complex and not publicly available. Don't forget to leave a like if this video helped you at all, and please subscribe if you have not already, and leave a comment if you have any feedback for me at all. Thanks again for watching.